Hi, I'm Katsunao Sekine, a financial planner. I update the video a long time. I provide information on home purchase and mortgage loan in Japan. When borrowing a mortgage, the first step to consider is whether you want to borrow at the floating rate or something else. Next, think about whether you will borrow a mortgage for 3 years fixed, 10-year fixed, or flat 35. This is the percentage of people who borrow a mortgage in Japan. This is fixed for 3 years or 10 years. 1 of 4 people can get the mortgage. The 10-year fixed interest rate for mortgage is cheap and popular, but many people doesn't understand how it works. Today I will explain about 10-year fixed interest rate for mortgage. I calculate the SoftBank mortgage with a 10-year fixed interest rate of 0.55%. This is a repayment table. This time, the loan amount is 40 million yen. The period is 420 times 35 years. The interest rate is here, 0.55%. I will turn it up here. The monthly repayment amount is about 100,000 yen, of which the interest portion is about 18,000 yen, and the principal portion is about 68,000 yen. The amount of interest is very small. Then this 10-year fixed interest rate. But what is the interest rate after 10 years? After 10 years fixed period end, you can change to a floating interest rate, 3 years fixed or 10-year fixed. Here again, 10 years later, I would like to think about the case of choose 10-year fixed interest rate again. Then what will happen to the borrowing interest rate after 10 years? This time I borrowed a fixed rate of 0.55% for 10 years, but I can't borrow the same interest rate after 10 years. It is written here in Japanese. It is written that it is the only new loan. In other words, you can only borrow a 10-year fixed interest rate at 0.55% for the first time, and then the fixed interest rate will be deduced from this base interest rate. The 10-year fixed interest rate at SoftBank 10 years later will be deduced by 0.65% from the base rate. If you choose to the 10-year fixed rate again, 0.65% will be deduced from the base interest rate of 1.9%. So the 10-year fixed interest rate after 10 years is 1.25%. It will rise significantly. At this time, there is a high 10-year fixed rate. So I think that some people may want to use a floating interest rate. However, even if you choose a floating interest rate, the interest rate does not become cheap. SoftBank variable interest rate is 1.807%, which is 1.65% less. So the borrowing rate is 1.157%. And this 10-year fixed interest rate, click here for the total interest amount. If you increase 0.5% every 10 years, with interest of 9.7 million yen, it will be close to 10 million yen. And here is the total amount of interest. If you borrow a mortgage with a floating interest rate of 0.5% under the same condition, 6.38 million yen. Let's compare. Fixed interest rate of 10 years, 0.55%. Total interest amount is 9.7 million yen. When the market interest rate rises 0.5% every 10 years. And if you borrow a mortgage with a floating rate of 0.5%, if the interest rate rises by 0.5% every 10 years, the total interest will be 6.38 million yen, the difference of 3.32 million yen. Here is my advice. Even if you are worried about rising interest rate, I recommend borrowing at the floating rate rather than 10-year fixed rate. This is because the fixed interest rate for 10 years will rise significantly like this. And if you are really worried about rising interest rate, borrow a mortgage at flat 35. No matter how much the market interest rate rises, the first borrowed interest rate is promised for 35 years.